This episode is brought to you by your company. That's right. As an early listener to the new and revamped AgTech Digest, we're offering early listeners and supporters of this podcast interested in sponsoring an incredibly generous discount of 75% off of our normal podcast sponsorship plans. It's our way of saying thank you for listening and supporting early on. So if you think your company would benefit and are open for a conversation, email me directly, harry@verticalfarmingpodcast.com. Thanks for listening and looking forward to your feedback.
Welcome to another episode of AgTech Digest, your go-to source for the latest in agricultural technology. In today's episode, we're diving into the latest developments shaping the future of agriculture. We'll explore the future of controlled environment agriculture and what industrial normalization means for the sector, examine a conversation on GCC food security and the role of patient capital in building resilient agricultural systems, and look at major agricultural credit programs and Africa-focused fund closings. We'll also cover herbicide resistance breakthroughs, genome editing licensing agreements, drought-resilient trait partnerships, a new biopesticide manufacturer entering the market, digital integration between precision agriculture platforms and aquaculture health technology funding. There's a lot to cover, so let's get started. This week's theme is execution over expansion. Across capital markets, crop innovation, and digital integration, the common thread is selective, disciplined deployment, not broad scaling. The two defining forces shaping this cycle are industrial normalization in controlled environment agriculture and tighter capital allocation across crop systems, where long-term investment horizons and the ability to execute at the operational level are increasingly what separate leaders from the rest. In this week's analysis, we are examining the future of controlled environment agriculture, which is transitioning from expansion-driven experimentation to early industrial normalization. Between 2010 and 2021, near-zero interest rates enabled rapid capital deployment into high-capex greenhouse and vertical farming projects, compressing financing risk and supporting aggressive scaling before supply chains and operating standards fully matured. The rapid rate hikes of 2022 to 2024 exposed the sensitivity of long-duration CEA assets to capital cost normalization, triggering consolidation and restructuring across the sector. The correction reflected financial repricing rather than demand collapse, highlighting how closely infrastructure-heavy models are tied to monetary conditions. Today, the sector is stabilizing under stricter underwriting standards and a more consolidated retail landscape. Growth is becoming phased, revenue-backed, and energy-aware, with automation and AI increasingly embedded at the design stage rather than retrofitted. Buyer concentration, private label expansion, price sensitivity, and energy exposure define structural boundaries, limiting pricing flexibility and overcapacity risk. The next phase of CEA is therefore unlikely to resemble the scale-first cycle of the previous decade. Instead, expansion is expected to be selective, regionally differentiated, and capital disciplined, favoring operators aligned with retail consolidation, financing realities, and operational efficiency. Additionally, the interview for this week features Giovanni Angiolini, Director Middle East and Africa at Dutch Greenhouse Delta, who transitioned from business consulting into horticultural ecosystem coordination after recognizing that ambition around GCC food security often outpaced operational execution. He works to bridge Dutch greenhouse expertise with regional governments and private stakeholders, promoting a public-private knowledge institute triple helix model that integrates infrastructure, operations, and long-term value chain management. Angiolini argues that controlled environment agriculture requires patient capital with realistic return timelines of 6 to 8 years, warning that past vertical farming failures have weakened investor trust and shifted capital toward longer horizon sources such as family offices. He views fragmented value chains, price-sensitive open markets, and water allocation strategy as structural constraints limiting regional competitiveness, and emphasizes that modernization must extend beyond technology to coordinated resource planning, energy integration, and crop prioritization aligned with national resilience goals. Ultimately, he frames GCC food security as a long-term execution challenge dependent on disciplined investment, institutional coordination, and attracting the farmer of tomorrow to build a technologically advanced and economically viable agricultural system. This week's news opens with a bang as Barings and Homestead Capital, closed a $300 million asset-based finance program to expand U.S. agricultural lending, strengthening institutional participation in farm-level credit markets. Transitioning to fund activity in Africa, Phatisa completed an $86 million first close toward its $300 million Africa-focused fund and acquired South Africa's Zaad Group, supporting its planned majority stake in East Africa Seeds Group to strengthen regional seed production and productivity. Shifting to crop innovation, Bayer introduced New Gold, a multi-crop seed brand targeting low-carbon oil seeds for sustainable aviation fuel and renewable diesel, linking seed innovation with agronomic support and biofuel market access. On the crop protection front, HRAC classified FMC's rimisoxafen under 2 herbicide action groups, strengthening resistance management in corn and soybeans ahead of regulatory submissions planned for 2026. Moving to trait development, PlantArc Bio and Helix signed a licensing agreement to integrate proprietary gene discoveries into corn hybrids for Brazil and Argentina, targeting yield stability under climate stress. Furthermore, Pairwise granted Wild Bioscience access to its CRISPR-based Fulcrum genome editing tools to accelerate AI-driven crop trait development across row crops. Turning to new market entrants, Proxag debuted as a crop protection company focused on biopesticides, adjuvants, and specialty fertilizers, securing its first production plant in Brazil to support regional supply resilience. Moreover, Bayer and John Deere launched wireless prescription transfers enabling U.S. farmers to seamlessly move FieldView data into John Deere's operations center, improving workflow efficiency. Finally, Biosort secured over 100 million Norwegian krone to commercialize its individual-based lice monitoring and removal system, supporting improved fish health and biological control in aquaculture. Looking ahead to upcoming industry events, mark your calendars for the Animal AgTech Innovation Summit from April 8th to 9th, 2026 in Fort Worth. Following that, Regenerative Agriculture will take place from April 13th to 16th, 2026 in Los Angeles. Finally, don't miss Fiber Connect 2026 and Precision Agriculture from May 17th to 20th, 2026 in Orlando. That wraps up today's episode of AgTech Digest. We explored the latest developments in agricultural technology, from the future of controlled environment agriculture and GCC food security execution to herbicide resistance breakthroughs, genome editing licensing, and the launch of a new biopesticide manufacturer in Brazil. It's clear that the AgTech sector is making strides in sustainability and innovation. With significant funding rounds including a $300 million agricultural credit program, an $86 million Africa-focused fund close, and over 100 million Norwegian kroner for aquaculture health technology, and impactful integrations between major precision agriculture platforms, the future of agriculture is shaping up to be smarter and more sustainable than ever before. Thanks for joining me. I'm Anna, signing off. Stay inspired and keep pushing the boundaries of what's possible.
This episode is brought to you by your company. That's right. As an early listener to the new and revamped AgTech Digest, we're offering early listeners and supporters of this podcast interested in sponsoring an incredibly generous discount of 75% off of our normal podcast sponsorship plans. It's our way of saying thank you for listening and supporting early on. So if you think your company would benefit and are open for a conversation, email me directly, harry@verticalfarmingpodcast.com. Thanks for listening and looking forward to your feedback.